Hello, traders. Gary Wagner here. Just before 1 o'clock in Honolulu, 7 o'clock in New York on Thursday, 16th day of September 2021, and this is the daily report for gold and silver. Both gold and silver plummeted, trading dramatically lower, down over 2% in gold, over 3% in silver. This following a report by the Census Bureau for August retail numbers. Economists that were polled by various news sources were expecting a decline in retail sales for the month of August from 0.07 to 1.8%, and the opposite happened. The Census Bureau released that we had a dramatic increase, and in fact, if you strip out car sales, you get an increase of 1.8% in terms of retail sales, and that, of course, could be a profound influence on the Federal Reserve when they convene next week. That being said, we'll talk about our trade that we were stopped out of today, as well as various support levels should gold and silver continue to drop. Both gold and silver got absolutely battered in trading today as the U.S. Census Bureau released its retail monthly sales report indicating that consumer spending increased by 0.17%, with total sales of $618 billion. That put tremendous pressure on both gold and silver, shifted market sentiment in regards to the upcoming FOMC meeting, and the fact that these strong retail numbers might change the tapering narrative, and as Reuters put it, give ammunition to bets that the Federal Reserve may hasten its tapering. Gold today lost $41, is currently fixed at $1,753.80. That is a net decline of 2.28%. And of course, it did stop us out when our stop was hit at 1770. We'll talk about that and support levels when we look at some charts. Traders, as I said, we were stopped out of our long gold trade today. We entered the trade at 1795 and we placed our stop at 1770. The thought process behind that was the 38.2% Fibonacci retracement level from a data set beginning at the flash crash that occurred right after the July jobs report up to the highs that came in on the third day of September. It was my belief that the lows that came in around $1,780 and specifically the 38.2% Fib retracement at $1,775 should hold. That was the reason I placed the stop at 1770. As far as today's report by the U.S. Census Bureau about August retail sales, the consensus by different analysts polled by Wall Street Journal was that it would come in at a negative 0.7%, in other words, a decline. And there was another poll done that was expecting a forecast of a decline of 1.8%. So the fact that the numbers came in positive rather than negative is why we saw such a sharp move in gold and silver, because it definitely took the market by surprise as the estimates came in well above expectations by economists that were polled. We will need to wait until next week when the FOMC meeting concludes, a statement is released, and Chairman Powell holds his press conference. However, on a technical basis, if we see gold continue to drop, the logical spot in terms of the next potential level for support is the Fibonacci 61.8% retracement. That comes in at $1,738.40. Below that is the 78% retracement that comes in at $1,712.80. With the exception of palladium, all of the precious metals were lower today, but it was silver that got hit the hardest in terms of a percentage drawdown, losing almost 4%. 3.83%, a 91-cent drop, taking the December contract to $22.89. This daily chart clearly shows the carnage that occurred in silver trading today, losing almost a full dollar per ounce and coming in at 22.79. Now, if we take a look at the current low here, the next levels of potential support, should the market continue to drop, would occur at a series of bottoms. The first one coming in right here at approximately 22.40, and below that is this low, which matches the low of the beginning of this fib retracement data set, and that comes in just below $22 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.